The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host for another day of wonderful fun in the stock markets, where right now, are we even doing anything? Hard to tell. See if there's a little bit of life in this market. We're up 2 points on the S&P cash. We had kind of a little bit of movement after the FOMC meeting notes. Basically, they don't all agree about everything. And I think everybody, well, I think at least the market was hoping, but not expecting that there would be kind of a Pollyanna, well, we can't raise rates this year. That there's an argument, and it's a 50-50 split on whether to raise in June, I think, and or August is the debate now. And so, we're up 1.5. Of course, volume has really gone light in the last, I would say, 10 days of trading, specifically the last 7 days. And, just the massive reversals have been on very light volume. We haven't had that great a volume to the downside, but even lighter volume to the upside. And I don't know what else you can say. I know today is options expiration day. Because of the FOMC meeting, it's not uncommon to see the market makers go delta neutral. I suspect that that's what we saw yesterday, that incredibly light volume push up was nothing more than some temporary market manipulation by option market makers. They didn't want to, they were going to go delta neutral a day early this month to stay out of the issues of maybe something happening with the FOMC meeting. Probably a little bit more of that this morning, and that's why we saw that the market was pushed up to 2086. We can probably assume that in the next hour, the option market makers will have everything baked in for expiration a week from now. As I looked at options last night, I'll see if they changed much today, but I have a feeling that the die was cast last night. I'm not making any new positions on it till tomorrow, till I see what's out there tonight. But it certainly looked like option makers, for the first time in several years, have absolutely no idea where this market's going. They think that it's either going 40 points up or 40 points down by expiration, and they have no real bias or idea which way it's going. 40 points, of course, that could happen in a day. And certainly we haven't had one of those days where we've had a 50-point move in the S&P cash. Long overdue for a surprise move, either up or down. So we'll continue to see how that works out. But, we've got a little bit of volume out of this. And we had a nice tick down there. Now we're down 2.5 points. But there'll be a little market indigestion and a little irritable bowel syndrome, I suspect, in the market. We'll probably see a lot more of what truly this means by about 3:30 today. So keep your eyes peeled. I don't suspect that we're going to have anything huge happening just yet. And a lot of people are focused on the Boston bombing verdict. I think they're kind of distracted for a few minutes. I suspect that after we get that over, we'll have people back with their heads in the ball game. And, second day. Just a couple of days after the first game of the season for baseball. But, off 2 points, is that a big deal? No, it really isn't the whole thing. I think more is the idea that they tried to push this thing up and the volume went to dust. Now, could they try one more time and see volume? Maybe, but I would doubt it. We've had a lot of opportunities. Now, there's also one giant atomic bomb sitting out here in the markets, and I talked about it before I went on vacation for Christmas. I am now talking about it again today because it is, we've got the latest read on some numbers that shows just how insane a stock market is. It's not ours. I'll give you a hint, but we will be talking about it today. So I think that's enough foreshadowing of this market. But I do digress.
And it's all just a little bit of history repeating.
And on this day in 1890, a backwards prospector named Leonidas Merritt scratches together $918 to buy 600 acres of land in the Mesabi Range near Duluth, Minnesota at a land auction. He soon hits the world's richest vein of iron ore, cutting raw material costs for the U.S. steel industry from $5 to $6 per ton of ore to just $2 or $3 per ton, a 60% drop in over 5 years. By 1905, Minnesota will produce 51% of all the iron ore in the United States, and of course, fairly close to Detroit. All those things coming together. Of course, old Mr. Merritt basically had to sell out for a few $1 million to a railroad tycoon because he overexpanded into that giant 1902 bust in the stock market. And part of that basically ended up showing that he had to sell out for pennies on the dollar. $2 million probably still, or $1.5 million still, probably quite a lot of money in 1905 or 1904, something like that. It was just a couple of years after all the railroad barons got together. I think that was 1903. But anyway, an interesting day, and probably something Andy Heck would be interested in. As our commodities guy. But I've been talking to him for about the last hour about a range of all kinds of stuff. If you've been paying attention to the news, you see all the problems with California. California is in the dreads of huge amounts of problems with water. A lot of those were self-made. A lot of people basically wanted nothing in their backyard, and several people, I don't know, wisely or unwisely, decided that there would be no building and no ability to take water and move water, even though the population continues to swell in California. Interestingly enough, though, they now have smart water meters so they can chase people around, and kind of interesting to see these articles out about these smart water meters where they can come out and see you watering at the exact wrong time and take a picture of it and then send you a $500 bill. I wish they would probably spent that effort into probably making sure there was enough water. But of course, what can you say? California and Florida, probably not that different other than the fact that Florida's all about the self, and California tends to be about the collective. And that's probably why I'm here. I'm much more interested in the freedom of the self than the, I don't know if I could call it, but the collective idea of everything. Whatever. I think that's going to lead to some huge problems, and especially for companies that are in California, but I'm going to have to do some more research on that. Now, we've got a 1-2 punch coming out of China today, and that is a move, a massive move over the last couple of weeks, actually through the end of February and now till today. For the Shanghai Stock Exchange. It has gone like a rocket up, and I don't know what else you can say about it. A massive, huge move in this market over the last few weeks. It has hit 4,000, and that's all on the idea, the promise of the idea of stimulus from China. If that is not bad enough, and you think that there's probably going to be a fairly decent pullback on this, what is a truly parabolic move in China, all you have to do is, did I have it here or did I move it? Is take a look at the news from Bloomberg, where they've gone in and looked at the earnings of tech stocks in China. To give you an idea, at the March 2000 bubble, Most of the NASDAQ had 156 PE, where normally you want something like a 12 or 15 if you're thinking about buying a company. It had 156, and that's why the NASDAQ blew up. Well, the Chinese internet stocks right now, as a group, 220 PE. And they're mostly responsible for that huge move in the Shanghai index. My guess is that no matter what the Fed does, whether they decide to ease or not, or even get into another quantitative easing, there is little they can do to fix this when the party is over in the NASDAQ-like stocks in China. A lot of these things are dubious at best, and probably parallel 1999, 2000, early 2000 as well. If you want something that keeps you up at night and makes me incredibly scared to be long anything, it is this Chinese market. I called a huge pullback in the China market maybe 3 months ago. I think 3 months ago on the Tech Insider Hour with Tom. May have been during a break. I can't remember, but I think Tom brought it up the week after that. But I said, if anything looks like a bubble, it certainly looks like the Shanghai and the Chinese stock market. Well, we've got it. It's 10 times worse than it was last fall. And no more do you have to look very far to see a number that tells you exactly how giant the bubble is. China basically tried to force everybody out of a bubble in the housing market over there. That market's probably pretty much where the bubble was left last year. It hadn't gotten any bigger, but the gamblers just left the housing market in China. They've gone into the Shanghai stock market and specifically have gone into, of course, these tech stocks. It's not an atomic bomb. It's a nuclear bomb. And it's all out global nuclear war. Oh, I got to get that clip, don't I? In the meantime, just think about what this market would be when the correction does come and will come in the Chinese market. Again, this isn't that things have changed at all in China. This is all based on one thing, and that is this thing took off when everybody said that there would be stimulus in China. Nothing has physically changed, no higher orders, no giant increase in the GDP of China, all massive speculation on a great deal of stocks without earnings. Think about that, 220 PE. How many stocks do you want to buy like that? Anyway, if you're not scared to death already, you will be by the time this show's over. Not really. I'm just saying that if you're looking for the reason, I think we've got one whale of a one. Yeah. We'll think about that. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As always, you can call me at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den. And, of course, everybody else is going after the rather brutal chop that's happening in the indexes right now, and feverishly going after it. Now we're up 8 points, or 9 points in the S&P cash volume. Pretty quiet since we went back above 2080. So I suspect I'm probably going to close out here. If I had to guess right now, I'd say we close out at 2080 by the end of the day. Might see a little bit more volatility, but for the most part, I suspect now everybody's going to look for something else to move this market. The next thing that's going to happen is earnings, and we're going to talk about that later in the show. But the earnings season kind of officially starts tonight after the bell with Alcoa, and we've got kind of the big stocks actually will move the market starting in earnest next Tuesday. And I don't know what else you can say about those other than a lot of these companies in this early part of earnings missed the huge move in the dollar last time. So the ones that got that were late in the season already were starting to show weakness from the strength of the dollar. These ones that are early in the earnings season probably much more likely to say this time that, yeah, the dollar was a problem. Saw somebody also talking on one of the financial infotainment shows today, and he basically said, well, everybody can just hedge their way out of that way. And the answer is you could if you knew about it for the last 3 years. But once the dollar moved, my guess is you weren't hedged for the next 3 years in a huge dollar move. You were probably hedged for 6 months or a year. And eventually those hedges run out and you're just stuck with a strong dollar. So I think it's a little disingenuous to think that somebody had gone out 3 or 4 years in the dollar. Most of the time you go out a quarter of 2, and you pretty much work on your expectations with analysts. If the dollar moves significantly during that time, let them know that in 6 months or 9 months it's going to come back out. But I don't think Apple, I don't think anybody else out there was hedging the dollar 3 years forward. Maybe 6 months, maybe 9 months, maybe a year. But I think a lot more of them are going to talk about it, and a great deal of them didn't hedge any of these moves or hedged a much more minor possible move in the dollar. Now, in the news out here, starting to see a lot of Apple Watch reviews. The embargo for these reviews are over. If you're not familiar with the way that a lot of these things work, Apple will give you, if you're a reviewer, basically you write for a magazine or something, they'll give you something. You have to sign something that says, one, I'm giving you the watch back. The other thing it says is you will not publish anything about this review until X and X time, X date and X time. So sometimes these things leak early, but I've signed probably 10 or 15 watch reviews now, and there's the compliment where you're really, really good, and people say, hey, it's better than cats. Then there's the other backhanded thing, which is, wow, this looks like great technology, and I'll be buying this thing maybe in a year when they've got all the bugs worked out and everything else. If you know anything about dealing with Apple, you've heard me talk about it before. If you say Apple stinks, you're not getting their next product. So they have to, if it was beautiful and everything worked perfectly, you'd hear nothing but glowing reviews. Basically, you're hearing kind of muddling middle down the road reviews, and all of the negatives are very, very couched as to make sure that Apple doesn't kick you out of the ecosystem. And it's kind of like the president. If you say something that he doesn't like, and this has been presidents for the last 10 or 15 years, they make sure that you don't get any news and they starve you out later. That becomes a very big problem if you're a reporter reporting on the White House and you get a call from the president head saying, hey, you say anything more about the president bad and he's going to cut you out. You'll never get any more help from anybody inside the government. That's kind of your bread and butter. And these reviewers with Apple kind of face the same thing. Can you be totally honest and not face retribution in this day? I think the answer with a lot of companies, not just Apple, is no. That these reviews are so couched and backhanded with the compliments, worrying, to say the least. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN TFNN, and you'll find the path of least resistance under trading newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
There's something going on pretty weird here with my machine, and I'm not exactly sure what it is, but it's happening. Hopefully everybody's hearing me. Everything's going well. The FOMC meeting notes here, kind of a Rorschach test. We're up 5 points on the S&P cash, 2.14 billion shares. So not a lot happening out here again today. As I said yesterday, actually at the beginning of the show, when I look at options and what the option market makers did last night, I suspect they were going delta neutral just a day early. And that was to stay out of any volatility today in case the Fed actually came out and said anything. But this looks like another one of these things right now. I'll look at the data again tonight. But doesn't look like market makers have a lot of faith in either an up or down move either. Of course, they always like this last week to just go out flat if it could once they set up delta neutral. But what they're really worried about is a giant move taking a lot of money away in the last 7 days of trading before the monthly option expirations. The weekly options have such a high premium it doesn't matter. So normally why I stay away from the weekly options is you got to be, it's kind of like having an implied volatility that's always much higher than the monthly options out there. But we'll keep an eye on this volume. We were talking about Apple when we left the last segment. Not a lot to happen out here. I mean, it's not quite moved a great deal. They had a downgrade from somebody saying that the watch would be a problem. I think everybody else has kind of figured out over the last few weeks this would not be a big deal. We said early on, or reported probably a month, 6 weeks ago, maybe 8 weeks ago, I think it was right after the beginning of the year, that Apple had only ordered 5 million only. Any other company would be jumping up and down. Unfortunately, only ordered 5 million parts to make watches, which sounds like a lot. But when you look at the cost of goods on this, it's not making the kind of 69, 70% margins that the iPhone makes. It's probably going to be about a 30 or 35% margin device at the low end. I don't know how many of these $10,000 gold iWatches you're actually going to sell. But to me, the interesting point is that they're going to have to, it's back to the tablet. They're going to have to sell 4 of these to equal one iPhone. They're selling 79 million iPhones. And I think since they started selling the new one, is selling any of these watches at 5 million? Basically you're talking about 4. So if they sold 20 million, it would be like selling 5 more million iPhones. So selling 5 is like selling 1.25 million more iPhones. So is that going to do anything in the coming quarters? The answer is probably no. Most of the reviews that I looked at are talking a great deal about how a few of the applications work very well. Those are written by Apple. That the ones written by third parties don't seem to work too well so far. And I have a feeling that at least the software development kit for third-party manufacturers wasn't anywhere close to being ready. And probably they changed a few things at Apple. So we're also going to have very few worthwhile apps to begin with. And I guess most of the reviews that I read through basically have to say one thing, and that is that they're constantly being bothered by events happening on the phone being transferred to the watch. And there's got to be a much better gatekeeper. This is not just an Apple problem. This is anybody that is using notifications, which is the technical word in Silicon Valley for everything. That is, every time you get an email, the thing buzzes you. Every time someone sends you a tweet, it buzzes you. I mean, talk about being in a cage, just being poked by a stick. I can't think of anything worse. I went to the dog park before lunch because I knew this market wasn't going to move until we got back. So I thought, well, this is a great day to go to the dog park. Went to the dog park, took my smartphone. I could watch all my stock prices, didn't have to think anything. But I didn't want to constantly be bothered by, things like either phone calls or tweets or anything else. I can't imagine being such a slave to all these. And it kind of made me think of Lucy, where she's trying to get all the chocolates in the machine, just always coming by. How do you let a computer or a machine make all the judgments on what's important to you and what's not? And that's, if I had to sum up the review so far, it's exactly this. This thing is an adjunct to notifications, and no one has it right. Apple doesn't have it right. Android doesn't have it right. Microsoft has it built into their new operating system that comes out this summer. And probably the best thing that they've done so far is integrate that into all the Windows desktop operations and in their phones. But even then, one, it's not out yet, of course, to everybody. I've got a pre-release version of it. But it's still annoying. It's annoying as all get out. And in fact, for a long time, in fact, right now, my smartphone is out in my car. A lot of times, especially during things like this, I don't want to be bothered if the market's going to move fast. I try to cut out erroneous interruptions to my life. So I'm wondering exactly what this is, other than probably the first volley into what is going to become the big deal, which is how do we get notifications right in the future for Apple? And like Forrest Gump says, that's all I got to say about that. I diverge. Yeah, I normally, people try to call me and they find that I don't answer. Your best chance is with email and or IMs. Yes, I do digress far too often, and it's too easy for me to get sidetracked out here. Other things of interest out here, we'll start looking at some stocks. Got a few things moving out here. I don't know how many of these things really matter. Basically, YZC. We were talking about how some of these stocks are absolutely just ripping in China. Zhansu Coal Mining, YZC, probably the only coal mine stock to rip, certainly has taken off out here. And what else is on this? I think they had a high short interest. But all these companies in China are ripping out here today, and that's making me think maybe we have a blow-off top in China. Not predicting one. We'll wait for the signal, but this is what I'm going to be looking at in H. ZNH is another one out here, Southern China Airlines companies. Now, this one, I'm going to start looking at shorting some of these out here, and probably going to take the rest of the night for me to go back through these. But I'm going to see if there aren't any options, anything else on these ATRs in China, because there's probably not a better sign out here that you hit a bubble than the Chinese market right now. China Southern Airlines, this thing was up huge. Another one out here on my scan is CHA. We'll be looking at this. Another pop, China Telecom. Not a lot of volume in this one, but it gives you an idea why all these stocks actually just took off today. But there are a few out there. I'm going to have to start going through these Chinese stocks tonight, looking for ones that have ultra cheap options, because I don't know when it's going to happen, but my guess is it will happen, and it will happen sooner rather than later, and we'll see a lot of movement out here. We got TGI moving today. They are getting a new CEO and president. And it's made a nice pop out here in the Triumph Group. These guys, I would be watching to short also. It had a huge move out here today. But again, they make a lot of the bodies for Airbuses over in Europe. And my guess is that that business is going to shut down fairly quickly. They've got, I think, enough orders to go on for a while. I'm going to have to go research this one. But a new CEO is not going to change what ails them. What ails them is the Airbus business. And to me, the 5118 low out here probably going to get tested sooner rather than later also. So a lot of these stocks out here probably internationally look a lot weaker than a lot of the U.S. stocks. What else do we have out here? LGF. And, of course, next week, huge earnings. And like I said, I suspect those will be on to the weak side. Lionsgate Entertainment had a big pop down today. Just how many of these companies are issuing and shoving out a great deal of shares over the last 2 weeks or a month? Just gives you also an idea that we're probably fairly close to some kind of highs in this market as they shove out additional shares. A lot of these are shelf setups like this one. Announced its 10 million share secondary offering at $32 a share. And, of course, it's back down to $31. If you're going to sell shares at 31 or 32 bucks, does it make any sense that the rest of the shares are priced at 35. Sell them and buy them back at 32, right? So that makes perfect sense on Lionsgate, pushing out a lot of shares. And again, I talk about these sliver deals where a very few amount of shares come out in the IPO, and they spend the rest of the company's life diluting shares for people. And as soon as there's a market that can absorb 10 million shares, Lionsgate's going to push a bunch of them out there. Another one is in BIP. We'll look at that. Again, you can email me at path@tfnn.com and post a message in the den. Yeah, Baba, Quaihu, Baidu, they're all up. But if you saw a market that was circa January 2010, or excuse me, 2000, you'd be expecting everything to be up also. Just to let you know that the party's probably very close to being over on all of those Chinese stocks, because it is a bubble and it is a parabolic bubble. And there's no thing that I can find out where earnings really have shifted into high gear in China. I haven't shorted them yet because they are parabolic. But my guess is that they're looking at 1929 style blow off top, square in the crosshairs. What else out here? Brookfield Infrastructure Partners, another one of these pushing out more additional shares. Looks like almost $1 billion, $890 million dollars in additional shares out here. This thing clipped down and high volume. Other stocks out here, TRCO. It's pushing out a bunch of shares, secondary, almost 10 million shares, let's call it 9.3 million shares to certain stockholders. So it's down a little bit out here. This is Tribune Media. And I'm not going to be investing in dead tree media companies anytime soon. I think a great deal of their stuff is Tribune newspapers. So that's kind of what we have moving out here in the market. I want to go back and look at some other stocks as we have time. I got a minute and a half left. So let's take a look at these real close. I want it for those people that have the art of the charts, pretty interested in some of the patterns out here that we saw. I wanted to see how some of these have moved and check out how these have worked. Beazer Homes, we pointed out that these housing stocks are starting to look like they've got a little bit of Gartley in them. And I'm not talking about a butterfly. I'm talking about the regular 222 out here. Would need to go to 1917 to complete the Gartley pattern, which is just $1 higher. But having problem right here at the B point already, the February 17th B point with 540,000 shares. It's had 500,000 shares as it hit it. 3 days ago, 463,000. Yesterday, 357,000. Today, 116,000. And this is not the only one in this sector. We had KBH. This one looking a little stronger, pretty much has already completed its Gartley pattern. And even with the huge day up and the break of the B point on some decent volume, since then, this thing's been extremely light on volume. And save the 1 day of the bounce, still the overall energy pretty light. So I'm looking for these at least to have topped out, if not to have and start the reaction and the retracement of these Gartley patterns. We'll be back in a minute. Give me a call at 877-927-6648. Email me at path@tfnn.com. Post a message in the den.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got the dollar moving out here. Of course, it's up 18 cents at $98.01 on the continuous contract. And we're now up 3.5 points on the S&P cash. I don't think you can make a great deal out of any of this stuff. I mean, just watching the movement out here, I would suspect that the market wanted to close out somewhere around 2080. Just from the action so far. Of course, that changes when you get in the last 30 minutes of the day. And of course, we have our cleanup hitter today, which is Tom O'Brien. I see him warming up in the bullpens out here. Maybe we roll over again today. Doesn't look like there's a lot of energy to go up. Doesn't look like a lot of energy to go down. So maybe they can push this thing around a little bit. But I don't see a lot of energy and direction just yet. I am expecting lower. And as I said, I'm waiting for the atomic bomb in the Chinese market to go off. I think the way it hit 4,000 today in the Shanghai market and pulled back is got to be rather interesting. But I think what I'm going to probably start doing is sleeping a lot more and staying up at night, getting ready for the futures, because I suspect that it will have to be a fast finger when these Chinese markets blow up, and you'll have to do something. And I think that there's some ways to be prepared for that now, and I'm getting my subscribers set up for that in the next few days. But you never know exactly when these things, it's kind of like the straw that broke the camel's back. What are you going to do? But I suspect that it won't matter what the Fed does at all when that cracks. You're going to have a reaction in these U.S. markets as a lot of people sell stocks. You sell, it's almost counterintuitive. And until you've been through it a few times in the market, you think, okay, well, I bought GE and it's a great stock, and therefore no one's going to sell it when the Chinese markets blow up. And the answer is just the opposite. A lot of people will be stuck in bad stocks, and they'll sell their good stocks and let their losers continue to run instead of just the opposite. There's a reason why they have that saying. If everybody did it normally, if they kept their winners and sold their losers, it wouldn't be much of a market. But people will continue to do the wrong thing, and that's why there is a stock market. But I do digress out there. Wanted to look at a couple other stocks out here. Let's take a look at one more before we have time. What do we have? Scans, test. I think there was one more I wanted to look at. EDU, which is a Chinese education company. It's not a Gartley, so we'll leave that one alone. These education companies have not been doing very well. Kind of interesting to see EDU moving up. Haven't seen a lot of energy really kind of come into the stock on the way back up. Another one that I'm looking at here. It did have a nice test of the August 4th low last year, and that was pretty good. So it has made a decent low. I just don't, a pretty big move, and the energy has not been up all this way, but I'd be watching some of these, the for-profit education companies in the States haven't been doing well, and I can't imagine that in China that this is probably any worse or any better than the ones we have here in the States about being of some efficacy, as they like to say in the drug business. But I do digress. Anyway, hang on for Tom O'Brien, following me on most of TFNN.com. In the meantime, sell when you can, not when you have to. Keep an eye out for those big swings in the China market. And we'll catch you tomorrow. Same bat channel, same bat time, channel 14 on Tiger TV, by the way.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.